All right, no relief rally just yet, but we still have 30 minutes until the start of trading. I'm Katie Greifeld.
And I'm Romaine Bostic. Matt Miller, Sonali Basak are off. Bloomberg Open Interest. It starts right now.
All right, coming up, China hits back, but in a measured way. Beijing slaps tariffs on $14 billion worth of U.S. products. For context, the U.S. put tariffs on $525 billion of Chinese goods. Meanwhile, out on that earnings front, untamed AI demand, Palantir, just surging right now on that bullish outlook. And next up, Alphabet reports today after the close. We'll navigate it all with Morgan Stanley top stock strategist Mike Wilson. He says that the recent developments in the market favor services industries. All that and more. But let's take a check on these markets right now. Like I said, not exactly a relief rally. We did manage to pare some of our losses by the close yesterday. And right now you can see the S&P 500 just about unchanged. Of course, the back and forth, the will he, won't he, when it comes to tariffs, really whipsawing this market. But you do see a little bit of green when it comes to big tech. Of course, Palantir helping out there. The Nasdaq 100 currently up by about 0.1%. A small gain. We'll see if we can find some momentum there. Finding some momentum in the bond market, at least when it comes to yields, moving to the upside. The 10-year Treasury yield currently higher by about 3 basis points right now, Romaine. We are just below 460 on that 10-year yield. We've been calling it the danger zone here on Open Interest. You're usually on the close.
I'm usually on the close, a different danger zone on the close, but we go back to equities and some of the big movers in the pre-market. You mentioned Palantir, 23% gain in the pre-market after its full-year revenue forecast. Blue Pass estimates driven by untamed organic growth. That's quote marks there. Demand for AI products here, setting up for what could be its best day in a year. Estee Lauder, though, going in the opposite direction. It's planning to cut as many as 7,000 jobs as part of her restructuring and says revenue this quarter could drop 10 to 12%. Analysts had only modeled for about a 7% decline, 5% lower on those shares in the pre-market. Spotify, though, getting a nice boost here after it reported its first ever annual profit and 675 million active users. Katie, I assume you're one of them.
Oh, big time. I cannot cancel my Spotify subscription, and I guess you can see that in the numbers. But we should probably talk about tariffs a little bit more. Of course, earnings a big theme today, but also, too, tariffs. Because, Romaine, it feels like most of the language about what we saw in retaliation from China has been measured, restrained, cautious. But then you take a look at PVH, you take a look at Illumina. These are single companies that have been added to the so-called Chinese blacklist. They're moving significantly lower pre-market. So maybe it's restrained overall, but at the single stock level, a little bit painful.
It may be restrained overall, but you kind of wonder if this is sort of more of a strategic move by the Chinese, saying we're not going to do this blanket thing that Trump did, but we will go after very specific companies. You have to be worried if you're an investor, right? I mean, PVH, Calvin Klein, Tommy Hilfiger. I know you're a big Hilfiger fan there. But, I mean, they rely, I think I saw a statistic. It's something like 6% of their revenue comes directly from China, but also the sourcing is also a big issue there. And then with Illumina, I don't know if you're an Illumina customer. That's like gene testing.
Not quite.
But again, they get about 8.5% of their revenue from China.
Yeah, big time. And I think it's an important point that you think about just the unpredictability here. Of course, that's part of the negotiation, I suppose. But for an investor, a huge headache. Let's try to make sense of some of it with Anne-Marie Horduran. She is Bloomberg's chief political correspondent and the co-host of Surveillance, joining us from D.C. right now. So let's talk about China first. Of course, tariffs on $14 billion worth of American products. We've been calling this restrained, measured, cautious. Is that the terminology that you would use?
I think so. This is a gentle response from Xi Jinping when that 10% came into play just after midnight overnight. Also won't take effect until next week. So potentially offering an olive branch to get on the phone, which Donald Trump teased yesterday, and then his White House press secretary reiterated that to Fox News. Potentially there would be this phone call. But you are going to see 15% tariff on coal and LNG. But this is less than $5 billion of U.S. energy imports, and then a 10% levy on some other things like oil, agricultural equipment, and then you guys mentioned PVH and another company as well being added to China's unreliable entities list. So you are seeing China hit back, but it's calibrated, it's specific. We should also note adding an export controls on a number of critical minerals and metals like tungsten, which is used in the defense industrial complex. So you do see this calibrated. Jonathan earlier called it a pinch, not a punch. But potentially, as opposed to Canada and Mexico, when it comes to China, this is the opening salvo.
Yeah.
This story's not over.
Well, what I'm curious, Anne-Marie, is what could China do? I mean, they're not going to send 10,000 troops to their border because obviously that would make no sense here. So if Xi Jinping were to offer some concessions to try to placate Trump, what exactly do they have to offer?
Well, I think one big one would be TikTok, right? If they would allow ByteDance to divest TikTok and not really have this seal of approval from the CCP to actually let the market do that. I think for Donald Trump, that would be huge. He says he wants to keep TikTok around. Larry Ellison was actually in the Oval Office yesterday. We don't know why, but him and Rupert Murdoch were there when he was signing a number of measures yesterday, including the Sovereign Wealth Fund. He was talking about how TikTok can maybe be bought with the use of this Sovereign Wealth Fund. We don't know a lot of details about this, but I think there are other levers to play here as opposed than when we saw Trump negotiating with China in his first administration.
All right, TikTok. Near and dear to my heart, to Romaine's heart
Could be one.
as well, I assume.
Anne-Marie.
Anne-Marie.
On TikTok.
Say that again?
I'm huge on TikTok.
Yeah,
You
I know.
that,
I
right?
follow you. Anne-Marie, great
You're
to get.
the one.
Great to get your reporting with the latest from D.C. That, of course, is Bloomberg's Anne-Marie Horder. Let's keep this conversation going now because joining us at the desk, we have Morgan Stanley Chief U.S. Equity Strategist Mike Wilson. Great to see you on set with us.
Great to see you.
So, Mike Wilson, you have the threat of cheaper AI models from China. I'm talking about DeepSeek. You have the threat of a multi-front trade war. When you think about your 2025 base case, has it changed at all in the past week and a half?
Not really. I mean, we're learning more every day. I mean, what a start to this president in the administration. I mean, there's so many announcements, and that was really part of our view coming into 2025. While we viewed the election itself as a positive result for stocks because it's more pro-growth and maybe not so great for bonds, by the way, we're now seeing what we figured in the first half is a lot of uncertainty, right? I mean, a lot of announcements. Okay, this stuff is going to take time to play through. It creates volatility, and that's what we're seeing. So, you know, at the index level, we think we're sort of capped, 6,100. We've been talking about that for a while. And really the action, as usual, what we try to do is find things to do both long and short inside the market. And we think there's plenty of activity. And so the announcements more recently, I think, support a lot of our calls, which are services over goods, software over semiconductors as two good examples, maybe industrials over some of the consumer-oriented plays. And these are the things that I think we can do as investors until we know what the impact of these policy changes are.
As you try to assess that impact, though, everyone's already trying to put a number on sort of what the effect would be on GDP. Even if he doesn't go through with these tariffs in full, the 2025 and 10, is there a concern that the uncertainty itself could dampen economic activity?
Exactly, and really that's really important for earnings too, Romaine, because GDP isn't guided necessarily, right? But earnings estimates are a function of company guidance, and so companies probably are feeling a little apprehensive here. Let's see what goes through. Let's see what doesn't go through. I'll give you a good example. In December, we saw a big pull forward of goods volumes because people are smart. They're like, let's get ahead of these tariffs. Then people forgot about the tariffs for some reason because nothing was announced on Inauguration Day. And then they come in like, oh, I guess this is real. So maybe that could, forestall some orders because people will say, well, we ordered a bunch of stuff extra. We don't know how long these are going to last. Let's just take a break on some of the orders and see how it goes. And I think that's the part that makes it difficult for investors to model earnings. It makes it hard for companies, quite frankly, to model that earnings, which is why we want to stay more domestically focused, things that aren't as geared to these types of shocks.
Well, to that point, Diageo this morning, it's a British maker of Johnny Walker, et cetera. Yeah. It removed its medium-term sales guidance basically for that reason. It's really hard to forecast the future when you don't know what's going to happen. But you mentioned that you're looking at both long and short things to do in this market right now. The long side is interesting, but the short side is really interesting. What are you thinking about there?
Well, things that have dollar international exposure, right? The dollar's very strong, and that is another reason for a headwind for potentially guiding, or even producing better sales growth. So staying away from some of the more multinationals that have currency exposure, translation risk, in addition to goods and export risk. Staying away from goods, goods that are affected by these tariffs, and it's just a straight hit to their bottom line. That's mostly in the consumer space where you don't have pricing power. We think in the industrial space, on the other hand, they could probably pass through some of that. That's what our analysts believe. So those are two good examples. And of course, the semiconductor area is one that's also being affected by this shift with DeepSeek, right? Where maybe the compute necessities are much lower now, and the real value is being driven at the application layer. That's been playing out, by the way, for 6 months. This is not new to them. The market's figured this out. And we've been on that one, and I think that just only continues.
I was going to say, it's been playing out for 8 days for a lot of us, and so a lot of people did not know what DeepSeek was until last week, and I assume you were studied up, though.
No, I found out about DeepSeek, I think, when everyone else did. And it gets to this whole idea of sort of market surprises, and we kind of knew coming into this administration and all of the geopolitics around it, this market was going to be surprised. Is there a way, or do you think the market has the clout to push back at all? I mean, Trump has said, at least publicly, he doesn't care what the S&P 500 does. I don't know if I believe that, but that's what he says. And the bond market action, the bond vigilantes, at least for right now, seem relatively subdued.
Well, look, let's face it. President Trump is a populist president, okay? And most people in America don't have a big stock portfolio or a big asset portfolio. And so that's part of the reason why he got elected, was to come in and do things that maybe don't boost the S&P 500 so much, but maybe do things for the average person. And I think it seems to be pretty committed to that idea, whether it's enforcing the border, immigration, whether it's dealing with China and some of the things that maybe are affecting consumer prices, trying to get inflation down, how we're going to fund the deficits, going forward, how we're going to cut back on government waste. I think that's what this administration seems to be focused on for now. Of course, he cares about the S&P 500 as a metric, like everybody does. I mean, it also has an impact on the economy. But we've made so much progress in stocks that I don't think a 10% correction is going to impact people's spending. Now, if you got a 20, 30% correction, of course, that would be something that would then affect the economic outcome. But we're talking about 3, 4, 5% so far. I mean, that's not going to affect people's spending habits.
Yeah, and we're about 2% from all-time highs really quickly, and you're coming back after the break. We're effectively talking about the Trump put here. Do you think that there's a Fed put that exists, or is Jerome Powell just looking through this?
Well, I mean, once again, I think the Fed also watches the S&P 500 only because it has a big economic impact. It's the most important asset in the world. Let's just be honest, right? I mean, more people around the world own that asset, so it does affect people's sentiment. It affects company sentiment as well. Is there a hard put from the Fed? I doubt it. I mean, I think there's probably a point where it becomes there's a loop where it starts to affect their forecast, and that's where they care.
All right, in conversation right now with Mike Wilson over at Morgan Stanley. He's sticking with us here, a deeper dive up ahead into some of the earnings on the day, both before the market and after the market. In the pre-market, though, Katie, we focus in on some of those big movers, including PayPal, lifting its forecast as it aims for profitability, and investors, well, they're a little bit more focused here, I think, on some of the numbers that came in a little bit light in the past quarter.
Yeah, absolutely. Which is funny because usually it's all about guidance, but it just feels like everything is under a microscope right now. Let's talk about PepsiCo, because you can see that move developing here. Of course, sales missed in North America. It also sees slow growth for 2025. It just feels like some of these staples, you could say that, buying a soda is discretionary. I know they do a lot more, but definitely under pressure right now.
And when you break down sort of each sort of unit in there, I mean, everything was pretty much down, had a negative sign in front of it in terms of growth. And how about Merck? This was kind of a curious story. The share is down 8.5% in the pre-market. This after it's halting sales of its HPV drug Gardasil into China.
Yeah.
And apparently, I couldn't figure out, some of this had to do with demand, but some of this had to do with some other issues as well. It looks like they're going to have to try to recalibrate how they want to approach.
Yeah, definitely. You can see the surprise in shares. I think a lot of investors and analysts looking for more color. Maybe we'll get that on the call. But stick with us. We have more with Mike Wilson coming up next. This is Bloomberg.
All right, now to high interest, a look at what's making headlines around the world. And we start off with President Trump holding talks later today with Israeli Prime Minister Benjamin Netanyahu. This will be the first visit by a foreign leader to Trump's White House. The talks are set to determine the next phase of Israel's war against Hamas. A joint press conference scheduled for around 5 p.m. Washington time. Meanwhile, fresh questions of conflict are being raised surrounding Kash Patel. That's President Trump's pick to lead the FBI. Patel received an $800,000 stock award last week from Trump Media and Technology Group. Disclosures around the new grant fall into a gray area due to its timing. If Patel were to hold on to the restricted stock as director, it could incentivize him to avoid undermining the value of Trump Media. And eggs. Bird flu causing a national egg shortage in the U.S. Restaurants and grocery stores from New York to San Francisco getting hit by that surge. A carton of 1 dozen eggs now as much as $7 in some areas of the country. Since the outbreak of the disease 3 years ago, more than 100 million hens have had to be killed.
Yeah, watching that story very closely. I'm going to have to decide between Starbucks or eggs, which is a painful choice. But let's talk about these markets, because you do have a little bit of green on the screen, but really just in color alone, because the S&P 500, you can call that unchanged. NASDAQ 100, maybe a little bit of a lift in tech stocks right now. We know that Palantir had a big night yesterday. We'll see what Alphabet can deliver. And then you take a look at the small caps, also unchanged, but the color is red, Romaine.
Morgan Stanley Chief U.S. Equity Strategist Mike Wilson still with us here on Open Interest. And Mike, a big focus on earnings. We got a few this morning. We get a bunch coming later tonight that will certainly be impactful to this market. When you look at the companies that have reported so far, is it laying down sort of an encouraging sign about the health of corporate America right now?
Yeah, generally business is pretty good. I mean, fourth quarter was our first double-digit growth quarter year over year in quite a while, and we saw a little bit better breadth. I mean, that's been the real missing piece. Is that, everybody complains about the Mag 7 or these 20 companies outperforming, but the reality is those are the companies that have delivered on earnings. Yeah. Some of that's cost cutting, but they've had some good top line too. And now our expectation is, assuming things kind of hold together, we will see more companies generate earnings growth in 2025. So we're seeing the beginnings of that, not fully yet. And so that's what we're really watching for. I think the risk this earnings season, as we predicted, would be, with all the uncertainty, would companies hold back a bit on 2025 guidance and also the dollar? Mm-hmm. And those two items, I think specifically, have held back some companies. That's why we're seeing some bad news and some good news. So it really is idiosyncratic. You hate to say it's a stock picker's market, but it really is now. Last year, and even in 23 especially, it wasn't so much a stock picker market. It was just buy hard, large cap, quality growth. Mm-hmm. That was it. That's all you had to do. Now I think there's opportunity to do stuff more at the stock level.
It's funny, we keep hearing, like you referenced, that it's a stock picker's market, but it seems like you really mean it this time, so it'll be interesting to see how that shakes out. I want to talk a little bit more about big tech before we broaden out, because after we saw the DeepSeek headlines last Monday and people learned what DeepSeek was more broadly, one of the narratives that emerged was that CapEx spend by the big tech companies would be under a microscope as well. You think about Meta announcing that it was boosting its CapEx, Microsoft, of course, spending up to $80 billion. It seems like that hasn't necessarily played out. We haven't really seen a tempering when it comes to planned spend.
Well, what is happening is there's a big deceleration, okay, and that's in our numbers. So, the hyperscalers have been spending at an unsustainably high rate. So I think last year they grew spending about 50%, which is incredible given the size of those businesses. And I think this year we're looking for 20 to 25%, and then next year it could be as low as 10. So that deceleration, remember, stocks live at the margin, right? And at the margin, the second, the derivative, the second rate of change is decelerating. And that's why a lot of these semiconductor stocks have started to underperform, particularly memory and some of the secondary AI type plays. It's not that growth is going negative, but the deceleration has to get priced into the market. But that opens up CapEx for other areas. And that's why we think the application layer is probably the next phase of development.
Well, it's going to be interesting. So later tonight after the bell, on the close,
you'll be
by
there.
the way, we're going to hear from Alphabet and we're going to hear from AMD. So two companies kind of at the center of what's been going on with AI, and more importantly, the AI spend. And I am curious if you are concerned at all about the lack of returns, at least the ones that would show up on the bottom line. Are you comfortable with the fact that we haven't seen that yet, even though these companies keep saying, look, we're going to have this run rate of, in some cases, over $10 billion, at least for some of the big hyperscalers? Well,
the market's concerned. I mean, that's why some of these stocks have underperformed since the summer. That's really when it triggered it in the June quarter of last summer. Mm-hmm. Some of the hyperscalers started to underperform. And that's the market's way of putting capital discipline around them. And so I think the company management teams will respond to that, which is another reason why we think, if you can't generate an ROI that, justifies the amount of money you're spending, companies will respond to that and they'll pivot. And we're seeing the beginnings of that. And I think the stock market, once again, has been figuring this out for the last 2, 3, 4 months. And that opens up opportunity for investment into other parts of the market.
Let's talk about some of the other parts of the market and how you're expecting them to fare on the earnings front, because you think about small caps and the small cap trade. It really hasn't worked. It's gone hot and cold, defying seasonality in a bad way. Do you think that earnings could breathe a little bit of life into that trade, or
not
TBD?
Yet. Not yet. We neutralized our underweight, our 3-year underweight last summer as just sort of like, okay, we've had so much underperformance, but the reality is that, and by the way, you have to be careful how you look at small caps. The Russell 2000 is one of the lowest quality indices in the world, okay? The S&P 600, on the other hand, is actually a much higher quality index. So that's one way to kind of look at the difference. We still think quality is going to be an important factor. So if you're going to go down into the small cap world, once again, you're going to have to be a little bit more company specific and say, I want to buy a company that has good balance sheets, generating free cash flow. It's not like I'm just making a big blanket bet on small caps. That's the wrong way to think about it. The only time small caps really outperform kind of en masse is coming out of a recession, because that's when expectations have been wiped out, earnings have been cut, rates have been cut significantly, and then you have operating leverage coming out of that. That's not the environment we're in. So there's opportunity in small caps, but once again, stock and sector level, not at the index level.
All right, you got to be selective in the small caps. Mike, it is always great to see you. Appreciate the time this morning. That is Morgan Stanley Chief U.S. Equity Strategist, Mike Wilson. Now, coming up next hour, how the U.S. consumer is feeling about travel plans this year. We'll speak with the CEO of Best Western Hotels. This is Bloomberg. All right, welcome back to Open Interest. A quick check on futures right now. Now the color is red when you take a look at the S&P 500. The NASDAQ 100 trying to hold on to pre-market gains. The Russell 2000 also falling out of bed a little bit. It's interesting, Romaine. You still see this hint of caution in futures right now. Even if you look cross-asset, the dollar, oil has reversed the moves we saw yesterday, but it seems like stocks just can't really catch a bid.
Yeah, and you're really seeing the S&P pinned right around that 6,000 level, right on that 20 and 50-day moving average. The catalyst, I don't know where that's going to come from. Palantir is not enough to lift this market wholesale. Maybe Alphabet does that after the market.
We'll pose that question to Katrina Dudley. She joins us up next with less than 4 minutes to go until that opening bell. Stick with us. This is Bloomberg. All right, we are moments away from the start of trading on this Tuesday. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld, and the pre-market picture, it's a prettier one than we were looking at yesterday. It took 3 phone calls, but we managed to get to a delay on tariffs when it comes to Canada, when it comes to Mexico. You can't say the same when it comes to China. Of course, we slapped those 10% tariffs on China. We saw the retaliation, and you can see the caution in the market right now. You think about where we closed yesterday, of course, down about 0.8% on the S&P 500. Not exactly shaking that today so far, but in any case, you can see that the bells are ringing and people are clapping. There's still things to celebrate, and maybe there will be more after the bell today when Alphabet steps up to the earnings front, because right now it's pretty quiet. You can see the S&P 500 pretty much unchanged, maybe a little bit of a lift, a little bit more of a lift when you take a look at big tech in the form of the NASDAQ 100. We know we got big numbers from Palantir, which we'll get to in just a couple minutes. That's giving a little bit of optimism to your big tech index, and I stress just a little bit. The small caps down a little bit right now. Of course, those smaller companies really buckling here under higher rates, even though, of course, they're more domestically focused. But there's a lot of cross currents right now. So let's look under the hood where things make a little bit more sense, because we're starting with the stocks that are heavily impacted by U.S. and China trade tensions. China added Calvin Klein owner PVH and U.S. gene sequencing company Illumina to that so-called blacklist, citing the impact on domestic firms in those sectors. The tariffs set to kick in on February 10th, and that leaves a little bit of room for negotiation. But even still, you can see people selling down these names a little bit when it comes to PVH, a little bit more when it comes to Illumina, down about 4.4%, Romaine.
All right, well, that's the tariff story on the earnings front. Some big movers on the back of that, including Spotify reporting its first ever annual profit, 670 million monthly active users now on that platform. Estee Lauder, though, not doing well. A plan to cut as many as 7,000 jobs. Restructuring the company sees revenue falling 10 to 12% in the current quarter. Analysts had modeled for a drop of 7%. And PepsiCo, those sales missing estimates in the most recent quarter as North American consumers pull back just a bit on spending. It's forecasting the slow growth for the full year. Let's take a look, though, at the star of the show in the pre-market. It's got to be Palantir. The share soaring after its full-year revenue forecast blowing past estimates, driven by, quote, untamed organic growth and demand for AI products. AI going to be a big story today, not just from Palantir in the pre-market, but Alphabet post-market. Investors squarely focus on the cloud computing and search business for that company, which it faces intensifying competition. Let's get a closer look at what's going on in the tech space with whoever, the co-host of Bloomberg Technology. Caroline Hyde joins us right now. Let's start with Palantir. 20+% gain here on the day. Alex Karp, who I thought was kind of crazy, but maybe he's crazy like a fox.
Yeah. He's untamed. Yeah. What he said, I mean, I love reading his letters. I love going to some of the webcasts. This is a guy that's talking about revolution, about people losing their heads, about organized violence. But ultimately, he delivers, and he delivers well. We've got 36% growth. What's interesting is William Blair, as the analysts over there, are pointing out, look, compared to his 3-year forecast back in 2022, he's actually missing. He was going to say, look, I'm going to deliver you $4.5 billion in revenue. He's going to deliver $3.75 billion, but still the crowd goes wild. This is showing U.S. government growth, U.S. commercial growth. What it is, though, limited on is international growth. So that's an interesting hit back on what will be ultimately geopolitical tension that benefits them at home, but not abroad.
Pop quiz.
Uh-oh.
Where did Alex Karp go for undergrad?
Oh, I know the answer to this.
You read the chat.
It was a tiny little college called Haverford.
Yes.
Is there anyone else famous that went there?
Katie Greifeld, also Howard Lutnick.
Okay.
Yeah, quite a...
Where is your talk of revolution? Why are you not talking of political scientists every time?
That's true, but...
Your hair needs to go up more.
Yeah, you know, I'm working on it, teasing it up. We should probably talk about Alphabet, though, because Romain threw it up on the board as well. Up about 1% right now, not quite 22%, but still nothing ahead of a really interesting earnings report this afternoon. What are we expecting?
Well, we're looking for solid revenue growth of 13%. You're going to get some decent earnings per share growth in excess of double digit as well. But this is a company who want to hear about AI spend. This is a company who want to understand about whether the China investigation, whether or not suddenly there's tension brewing between US and China and Xi Jinping trying to tentatively fire back by saying we're going to analyze from an antitrust perspective Alphabet, whether that's going to impact their Android business. Like, this is about phones, this is about operating systems, this is about anything but Apple over in China, and they are dominant there. So that'll be a key focus. But look, this is a company that we're going to try and understand whether their competition from DeepSeek is going to affect them in any way from an open source perspective. But ultimately, the search competition, lackluster. They have not given way in terms of market share, it would seem, thus far. And so they've continued to outperform. Search is going to be strong for them, and indeed advertising, of course.
Still waiting for that big embrace of Bing. Not exactly happening yet. Caroline Hyde, it's great to see you. Big show coming up.
Did she go to Haverford, too?
I don't think so. Okay. I feel like she went to
With this voice, I think, unfortunately, I hadn't got into America by that point.
All right, Caroline, of course, the co-host of Bloomberg Technology, coming up at 11 a.m. But stick with us now. We have a great conversation with Franklin Templeton, Senior Investment Strategist Katrina Dudley, joining us at the desk. Great to see you, Katrina.
Thanks for having me.
So let's talk about tariffs. We had a blistering column out on the terminal from Bill Dudley this morning, and his read is that the stock market's reaction so far suggests that there's some hope that Trump is just bluffing. I think that's wrong. His words, not mine. The president genuinely believes tariffs will strengthen U.S. competitiveness and generate significant revenue. What's your reaction? What do you make so far of what we've seen in the market?
I think, first of all, he is not bluffing. This is an extension of tariffs that he's already put in place. But I think what's more important is the Chinese reaction here. Obviously, with Canada and Mexico, we've had those phone calls and we had that pause. But in terms of China, the amount of goods that they're actually putting tariffs on is very small relative to the basket, the 525 that we're looking to put tariffs on versus their 14. The second part of this is that if you look at how much of China, that they have like 3 times the exposure to America in terms of what we import versus what they import of our goods. So China is really on the hook here. And then finally, we've seen the data coming out of China. We know that the economy isn't strong. We know that the property sector has been kind of teetering there. So from that perspective, they need to tread very carefully. And that's a very different position than when we had the first round of tariffs.
Do you worry at all about the uncertainty around this, even if China remains restrained, even if Trudeau or whoever his successor is able to get Trump on the phone and placate him, as Scheinbaum did as well? The uncertainty and the volatility in between all of that, does that worry you as an investor?
I think that the U.S. as a market has just got so many good growth drivers and such support for economic growth, and economic growth is the driver of earnings. Earnings are the drivers of stock markets. So I don't think from a U.S. perspective we are particularly worried about it.
So no disruption disruption in earnings?
I don't think you're going to see a disruption in earnings. I think that there's been enough telegraphing of this, number one. Number two, companies, the big risk is whether or not they can pass along these price increases, because obviously most of the goods that are imported from China are often actually incorporated into something else that's sold by
Katrina,
US
I can't take any more pass-alongs. I'm paying $7 an hour for eggs.
I understand that you're paying that, but you've also got a market where wages have been going up. So you've seen wage growth across the board. You've got a very strong employment market. So most of the people who are looking for jobs have the jobs. So even though, yes, it's not great, you're only feeling uncomfortable about inflation because you're coming from a period where you hadn't seen it. And so it's different from that perspective. But I grew up in an environment where you had inflation. And so for this regular increase in prices, we're just going to need to expect it, and it's a sign of actually a healthy economy, not an unhealthy one.
I hear what you're saying, but you think about just human psychology and the psychology of the consumer. Okay, maybe we feel uncomfortable because we're not used to inflation, but that's still our lived experience. So do you worry about the state of the U.S. consumer feeling uncomfortable and pulling back maybe on some big purchases, maybe on some of those experiences that have been supporting the economy?
Look, you're right. Experiences, services are the driver of the U.S. economy, which is why the tariff piece is such a much smaller part. But we're starting to see some signs of weakness. You saw some of the earnings in consumer products, which is a little bit worrying in terms of people just taking a pause. But a pause is not necessarily a stop. And I think that that's what we've got to be cautious about. But we're seeing it. You're hearing signs of people not going to dine out and eating in more, kind of just tightening that belt. That's the response to the $7 in eggs or the higher inflation that's showing through in your diner bill.
I do have to ask you about what's going on the technology side. Obviously, AI was a big driver of the market gains we saw last year. There is some concern about CapEx spending this year and whether we start to see more of a return for some of those companies and ultimately for investors.
Look, I think what we've had with DeepSeek is something that we've seen time and time again. History, it doesn't rhyme, but it definitely is very, very close. We've seen it in the fiber optic market, where you had new technologies that make the existing technology more efficient. And what does that do? It basically makes it available to a broader swath of companies. And that is what the driver is. And that's why we think that the average stock is going to work this year, because we've talked about AI, but you've talked about the impact in a very, very narrow part of the market, and we're now seeing the use of AI broaden and the earnings growth outlook broaden across the market, and I think that that's positive.
All right, Katrina Dudley over at Franklin Templeton here on Open Interest this Tuesday morning. Stocks now open in the cash session. Major indices, the S&P, NASDAQ, and the Russell all in the green. Some of the individual movers that are helping to move this market here on this day. Well, Super Micro, remember them, Katie Greifeld?
Barely, Romaine. Tell me about it.
Up about 5%. I mean, they're at $28 a share, a far cry from where they were during the heyday here, but maybe a little bit of dip buying here as people look for some bargains.
They figured out their accounting. We're all good there.
I don't know the answer to that, Katie Greifeld, and I don't want to get myself in trouble. So let's move on to the next one there.
There we go.
Some drags on the market. PayPal down 10% here on the day. A little bit of concern here about what we learned out of their earnings report.
Yeah, which is interesting because they lifted their forecast. They're aiming for profitability, but can't overcome that when it comes to the past. And then you take a look at Merck, and this is what we were talking about earlier. This is a really interesting one, that profit outlook miss, but a lot of question marks about them choosing to halt Gardasil sales in China. That, of course, is an HPV drug, and you can see that weighing on the stock right now, down about 11%.
Don't forget Palantir. Palantir up 25% right now. Spotify up 11%. Here's one from Matt Miller. Ferrari race up 8% here.
There you go. I have to say the Palantir.
There's a lot less talk about cars without Matt here.
Yeah, we're going to talk about Ford a little bit later.
Is he on assignment? Because he's been gone for like 4.5 weeks.
I thought he was diving. Okay. Indonesia, I had that on my mind for some reason.
Indonesia?
He'll be back eventually.
Oh, wow.
At least
how
that's
did he get that assignment?
Sources tell me he'll be back, so we'll ask him then. But coming up, pull back. PepsiCo reports a miss and warns of a slowdown this year. More next. This is Bloomberg. All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, AMC getting upgraded to neutral over at Roth MKM. The firm says that the box office is entering a positive 2-year cycle and that AMC's risk-reward feels more balanced. Next up, Tyson getting raised to neutral over at Piper Sandler. Strong chicken demand helped the food giant raise its profit outlook and beat earnings estimates. And finally, Juniper Networks getting upgraded to a buy over at Evercore ISI. The analyst says that the stock will move higher whether or not Hewlett-Packard buys it. And remember, Juniper reports after the bell today. Romaine, I know you'll be all over that.
Absolutely. Here, we're also going to be all over Mondelez, which reports after the bell. We got a preview maybe of what we're going to learn out of PepsiCo this morning, posting a miss in its fourth quarter results. The maker of Cheetos, Pepsi, all your fan favorites, forecasting sluggish growth for the year ahead, citing a pullback from North American consumers. Those shares open lower by about 2.8%, now down about 2.2%. Dina Shanker, who covers food for Bloomberg News, joins us right now. That's a pretty big beat, Dina, but talk about Pepsi specifically here. I was taking a look at some of those growth numbers going forward here. I mean, this is a company that's been dealing with single-digit growth, in some cases negative growth. What's happening?
Well, what we're seeing is that consumers are pulling back across the supermarket. We're seeing that from a lot of different food companies. And PepsiCo says they are going to focus on value. That does not mean that they're cutting all their prices. Instead, what it largely is going to mean is offering new varieties of packaging so you can buy at a lower price point. They said they're going to emphasize some of their more value-focused brands. And they also mentioned that they are going to be leaning in on their, what they call their permissible, but what we would call healthier types of snacks, better for you options, mini meals. So that might mean their Sabra hummus, or they recently acquired Siete Foods, a healthier snack brand. So, and of course, they're also talking about efficiencies and productivity gains to help with their margins. So they've got a lot on their to-do list, I would say.
Yeah, they're like corn chips or something. I don't know if they're made out of corn, but it's like corn chips, but they're healthy.
Interesting. I saw Smart Food popcorn in the B-roll there. That looked pretty good. I'm a fan of that. But Dina, let's talk a little bit more about volume and pretty much the price to volume levers that they have to pull there. You said that they're not going to be cutting prices necessarily. Do they have any room to raise prices here?
You know, most of the food companies are cutting prices at this point, offering promotions. I think that raising prices is a really risky move at this point for any food company.
All right, so let's push it ahead to Mondelez reports after the bell tonight, of course. Oreos. I mean, everyone loves Oreos. I am curious, though, Dina, kind of looking at Pepsi's earnings, and more importantly, what they said in there. Is it that people are eating less of some of those types of products, or are they just trading down, I guess, to either store brand type of knockoffs, if you will, and other sort of types of products that are just simply cheaper?
You know, it seems to be a mix. One thing that we've reported on at Bloomberg, and that was mentioned in the call today with the CEO of PepsiCo, is that there's growth in value, so that could be the store label, and in premium, so that would be more expensive options. So these companies have both directions that they can go in and try to leverage for themselves, but consumers are just getting pickier about what they buy at the supermarket.
And Dina, really quickly here, I mean, we've been talking a lot about tariffs that's weighing on the stock market, but you think about this big rally that we saw across the board because there was a lot of hope that maybe we could see more M&A, we'd see more deals. When it comes to the food and beverage industry, what's the outlook when it comes to potential consolidation?
You know, it seems like every year they're saying there's going to be lots of M&A, and we'll just have to wait and see. Last year, we saw the biggest food M&A deal that of ever with Kellanova and Mars. But this year, who knows? Maybe we'll see more. We know that Mondelez had wanted to acquire Hershey late last year. That would have been a massive deal. But Hershey's the Hershey Trust, which owns the majority of the voting stock at Hershey, rejected that bid as too low. So could it come back? I don't know. We'll just have to wait and see.
Watch this space, as we say in the business. Dina, great to get some time with you. That, of course, is Bloomberg's Dina Shanker.
Have you tried these Post Malone Oreos? There's a little swirl on them. I've been looking for them. They're hard to find.
You know, I'm not up to date on my Oreo flavors because they add new ones all the time.
Yeah, that keeps you on your toes.
Yeah, I got to browse the bodega a little bit more, but coming up, we're going to switch gears dramatically and talk about Apollo's plan to tap wallets of rich clients finally paying off. Details on the asset manager's record haul in our Wall Street beat. This is Bloomberg. All right, it's time now for the Wall Street beat. And Apollo's wealth business raked in record capital last year. The asset manager raised about $12 billion. That boosted assets from the sector by 50%. But you can see the shares actually a bit lower right now. So let's unpack that now with Bloomberg's Sridhar Natarajan. He is Bloomberg's chief Wall Street correspondent. We'll congratulate you again on the promotion. I know you love that. So talk us through this reaction because, okay, a record amount when it comes to private wealth, but it seems like overall AUM, maybe a little bit of disappointment.
And I think that could be the major factor why the shares are trading a little lower today, both at Apollo and KKR, which also reported earnings today. You see in the market reaction, the shares are down a little bit. Both of them came in a little bit light on the asset under management figure, but the more important factor is look at what the stock has done over the last year. At Apollo, it's been up 60%. Over the last 5 years, it's quadrupled. At KKR, it's gone up 5 times. So giving up a little of those gains is completely fine. I think the more important trend that analysts and investors are looking at is how do they continue to make inroads with their push to draw in those ultra wealthy clients, draw in more of the insurance money, continue to expand in that front. And I think it's fair to say that they're both showing reasonable amount of progress because that is a big area of focus for the entire alternatives investment firm space.
I'm glad you brought up the stock price performance because it's always fun to compare the market caps of these different asset managers because Apollo ranks at 91 billion in market cap. You take a look at BlackRock, which controls what, 10, 11 trillion dollars at this point. They're at 156 million dollars, which isn't too big of a gap when you consider the gap in their AUM.
But you also have to look at the products that they're hawking out there.
Yeah.
BlackRock's products are low fee products, index funds. Those are not products where you're going to make a lot of money.
You can say ETFs.
ETFs, fine, Katie. I'm sorry. I forgot I'm talking to you. So you have to think about the fact that it's a volume game there. Whereas when you look at players like Apollo and Blackstone and KKR and the Carlyles of the world, it is about finding products that pay a higher fee and drawing investors to that space, whether it used to be your traditional pension funds and sovereign wealth funds to now insurers and the ultra wealthy.
One interesting thing, and we can talk about KKR. I mean, you are our chief Washington Wall Street correspondent, I'm told. But when we talk about KKR's expansion or expansion of products, and specifically this idea of holding on to some of these investments, basically creating this strategic fund here, what is that a signal of? Is that a signal of the health and growth of the business, or is that a signal that they can't get rid of some of this stuff?
It's a little bit of the Berkshire model, right, where you're holding on to some of these private equity bets for the longer term with the understanding that they will continue to throw off dividends. So as long as that is an investment that makes sense, I don't think you should really look at it as whether they are having the right exit opportunity or not. They made a strategic decision there that they will hang on to those investments. Yes, there is a broader issue in the private equity space, something that we have tackled and wrestled with over the last couple of years, where a lot of these funds have struggled to get out of some of their investments, but the environment seems to be changing even on that front, and a lot more of these private equity executives and a lot of the bankers who are having these conversations are at least coming out there and sounding way more confident about their ability to transact and strike more deals.
All right, Sridhar, got to leave it there. Great roundup of what we're seeing when it comes to Apollo, to KKR, both down today in the stock market. That is Bloomberg's Sridhar Natarajan. Meanwhile, a quick check of these markets. We're about 26 minutes into the session. We do have a little bit of lift to markets, a little bit more when you train your eyes on the NASDAQ 100. We'll discuss next, of course, another hour of markets conversation coming up. Stick
There's
with
another
us.
Hour?
A whole hour.
Oh, wow.
Don't go anywhere. This is Bloomberg. All right, we're 30 minutes into this Tuesday trading day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Romaine Bostick, Matt Miller, and Sonali Basak on assignment on this day where stocks are getting a bit of a rebound.
Yeah, a little bit of a bid in the equity market right now. You can see the S&P 500, the NASDAQ 100, both higher as we await earnings, as we await some economic data in the form of jolts. And we just got the figures for December coming in a little bit light relative to expectations, about 7.6 million jobs added in the December period there. That is below expectations of 8 million on the survey and lower than the prior reading. So let's get right now to Bloomberg's chief international economics and policy correspondent, Michael McKee. So a little bit below when it comes to the job openings.
Well, given the way this series has moved, it's a lot below. Comes in 7,600,000 after 8,098,000 the prior month. It would seem to fit what the Fed wants to see, a slightly looser labor market here. Job openings rate 4.5%, down from 4.8%. Quits is always something that everybody's following, and in this case, we saw the number of quits little changed, but the quits rate stays at 2%. Layoffs and discharges changed little at 1.8%. Basically, what it looks like here is that we've got a labor market where companies are not hiring, but they're not letting people go either. And the number of jobs reflecting the fact that they're not hiring now.
So what does that mean for the big monthly jobs report that we're going to get at the end of the week here? I mean, does this actually sort of change the narrative on that?
Not at all, because this is December data, and we're going to be getting the January payrolls report. It gives you an idea maybe of a setup going into January. But other than that, it really isn't telling us anything about what we're likely to see. Basically, the view going into it is that we're going to have a little bit of reversion to the mean, see job creation come down a little bit, but unemployment unchanged. Same story that we're seeing here. Should mention factory orders came in down 0.9. That had been a 0.4 decline in the original durable goods orders last week. Durable goods down 2.2%, unchanged. So what we're seeing there is basically non-durable goods coming in lower than anticipated. So not a huge indicator, but something that people are keeping an eye on for strength of business spending.
All right, Mike McKee, appreciate that roundup, of course, of the economic data. We do have some breaking news on the geopolitical front that we'll get to right now. And the red headline is that Panama said to mull canceling port deals with a Hong Kong firm. Of course, this is according to people familiar with the matter. Panama is weighing whether or not to cancel its contract with a Hong Kong-based company that operates ports near the Panama Canal. The context here, of course, that this would be a potential concession to diffuse President Donald Trump's threats about countering China's influence around the key waterway. Of course, this is something that we've been keeping an eye on. Sort of percolating in the background to the tariff conversation.
Yeah. This would be a huge deal. I mean, this would be a major shift in the geopolitical structure down there. Remember, we talk about, obviously, U.S. ownership of that canal for years, ceded over to the Panamanians. And, of course, the Chinese managed to move in on two major ports on each end of that here. And that seems to be some of the beef that the Trump administration has, that apparently, in his view, they exert too much control over what goes in and out. Of course, the Panama Canal, at least based on Bloomberg, responsible for like 75% of the goods that come in and out of the U.S.
Yeah, indeed. The canal generates nearly $5 billion in revenue for Panama each year. And if this is happening, of course, this potential move, it would be an early win for Marco Rubio, of course, the new U.S. Secretary of State. He just visited Panama. He expressed concerns while he was there about China's, quote, unacceptable influence over that canal. And two attorneys have filed a lawsuit against the Hutchinson contract, alleging that it violates Panama's constitution. So we'll see, of course, what happens here. But according to people familiar with the matter, Bloomberg reporting that Panama is said to mull canceling that port deal with that Hong Kong-based firm.
It's guaranteed there's going to be a legal fight. But we should also point out, too, that at one point, Trump actually threatened potential military action if they did not get rid of some of these contracts. Remember, this is one of two that they have to sort of address here. This one with Hutchinson, at least based on this reporting right now, could potentially be going away.
And of course, with the tariffs, that was a lot of back and forth. We should also say here that there's no decision has been made. This is according to people familiar with the matter, speaking to Bloomberg News. The government intends to proceed in a way that would avoid lawsuits, follow due process. So this, of course, is one of those very fluid situations here on the geopolitical front. But we know that this has been a priority of Trump, an early priority.
It's been a priority, and it's putting a lot of these nations in the position where they are going to have to pick a side here, whether they're going to stand by the U.S. and the world's largest economy, or whether they feel that there is maybe some benefit to being more aligned with some of the other economies, such as China or India, et cetera. But once again, the Panama Canal, no matter who controls it right now, it is the main conduit for goods in and out of the U.S., and that gives the U.S. a lot of influence and say over how it's run.
It is an interesting complement to the tariffs. Of course, we've been talking about the fact that the U.S. placed tariffs on $525 billion of Chinese products. Of course, China retaliated. So we've been thinking about how this geopolitical spat has been playing out in some ways with tariffs, of course, in other ways with the Panama Canal here. So this is sort of a multi-front situation that we're looking at when it comes to the U.S. relationship with China. But let's take a look at these markets right now, juggling these geopolitical headlines, also juggling what we're seeing when it comes to economic data, jolts dropping at the top of this hour, and also the earnings picture. You take a look at the S&P 500 right now. We still have a lift and then some. The S&P 500 currently at session highs, higher by about 0.4%. You take a look at what's going on in big tech right now. The NASDAQ 100 also at session highs, up about 1%. We'll continue to track that. But let's get more on this breaking news now with Nick Wadhams. He is Bloomberg's national security reporter, one of the reporters behind this scoop. Nick, tell us what we know so far.
What we understand is that Panama's government is essentially looking at the possibility of scrapping the contracts with Hutchison Ports, which is a subsidiary of CK Hutchison, of course, the major conglomerate based in Hong Kong. And the issue there is obviously this comes amid a lot of the pressure from President Donald Trump, but what they're looking at is whether the port deal that was originally signed around 1997 and then renewed in 2021 may have broken or gone against the Constitution because there are some allegations or concerns about issues around taxation and other matters. But what we understand at this point is that Panama is thinking of canceling that contract.
Canceling that contract, severing completely their ties with that Belt and Road Initiative. Is that what we're talking about? And if so, Nick, what would the response be by Xi Jinping?
Well, I mean, you could bet that it would almost certainly go to the courts. China has steadily eroded Hong Kong's autonomy, but, still there is an argument that CK Hutchison, this contract was signed many years ago. And in fact, in 1999, the U.S. State Department assessment at that time was actually that it posed no threat to U.S. interests. Obviously, a lot has happened in the intervening 25 years. And particularly President Trump has said very explicitly that he thinks China is a major threat to U.S. interests there and, had even sort of vaguely threatened military action. But what you did see is Secretary of State Marco Rubio heading down to Panama this week. It was his first trip as Secretary of State. So a clear priority. Now we're getting this. It really appears like the Trump administration is putting a lot of pressure on Panama.
Yeah, talk to us a little bit more about that trip. It was certainly interesting to see that was Rubio's first international trip in the role. What do we know about what happened on that trip, what conversations were had, what potential concessions were talked about?
Well, really, I mean, at the start, there were two major concessions that Panama gave. One was to allow free passage to U.S. naval ships going through the canal, and the other one was to sever its relationship with China under the Belt and Road Initiative. Whether that's enough will remain to be seen. Panama has slowly been increasing and solidifying its relationship with China over the years through bridges, infrastructure projects. It switched its recognition to China from Taiwan, one of the last countries in the region to do that. So you have had this momentum shifting toward much closer ties with China as China looks to expand its own economic and global influence in places, in countries across South and Latin America. So, you have two sort of momentum pushes here. One is the Chinese influence and one is Trump coming in and saying, listen, we're not going to accept this, and pushing back hard. So far, it looks like there has been some sort of a momentum shift in President Trump's favor.
All right, Nick, really appreciate your reporting. That is Bloomberg's Nick Wadhams on that Bloomberg News scoop that Panama is weighing whether to cancel its contract with the Hong Kong-based company that operates ports near the Panama Canal. We will continue to follow that story, but let's broaden out this conversation to the markets with the S&P 500 at session highs. We'll do that with Amy Kong. She is Corient partner and wealth advisor. Great to see you in person, Amy.
Hi there.
So it's an interesting market we have right now. As just demonstrated, a lot of cross currents when it comes to what's going on, when it comes to geopolitics, when it comes to trade, when it comes to earnings, when it comes to this economy. How are you separating the signal from the noise right now?
Absolutely. There's a lot of headlines. And I think just judging by how the markets have been behaving in January so far and now into February, there's a lot of reaction to headlines. And we certainly want to make sure that we're mindful of the headlines, but not necessarily just jumping in with the rest of the market. And in essence, we are trying to focus more on earnings, which so far has been constructive. And we want to make sure that at least the Mag 7, which are a big contributor to the S&P earnings growth for this year, all of that seems to be constructive from what we're seeing. And, so far, at least from what we're seeing, that trend hopefully should continue.
You're comfortable with valuations, though, right now?
Not very, Romaine. Great question. And that's one of the risks that we're seeing for 2025. The market's now trading at 22 times forward earnings. It's really pricing at near perfection. And I think as these headlines continue to really, rock the markets one way or another, or sway the markets one way or another, it's really going to obviously create more volatility as we're heading into the rest of the earnings season.
Amid that volatility, though, do you find any true havens out there? So if investors come knocking on your door and say, okay, I'm a little worried, where do I go? What's your advice?
Absolutely. I think at the end of the day, when we're zooming out and understanding that the market has appreciated 20+% last year and 20+% the year before, historically speaking, this third year could be bumpy. And so what we're really trying to stay closer to is high quality earnings at this stage of the game. And really, as we're thinking about tariffs and really all the other macro challenges that we're seeing, we're really trying to stay with companies that have levers to pull, whether it's to absorb the tariffs that are coming our way, or innovation so that the revenues can continue to recur. Subscription models are a really great fit for us. So we're really staying with high quality earnings at this stage of the game.
Do those tend to fall into any one specific sector or industry, or is it more idiosyncratic than that?
It's probably, you can probably find these opportunities across the market. Certainly the markets have been more focused on technology per se, but as this AI theme continues to really broaden across multiple sectors, what we're finding is that, different companies in all sectors are using AI as a way to really gain productivity gains. And I think that continues to be a nice silver lining in all of this volatility.
When do we start to see that, though? Because, this whole AI trade, at least the conversation around it, is always about, NVIDIA and chips, or maybe the big hyperscalers, like a Microsoft, et cetera. But I keep hearing about these benefits, and I know there are a lot of companies that are already using this.
That's right.
Including the company that I'm employed by. But I do wonder when we start to see that show up as a net positive, not just for the company, but for an investor in that company.
Absolutely. We are starting to see that. I think the first wave of AI is certainly some of the hardware that you just mentioned, chips and, cloud computing spending, et cetera. But this next wave could be a function of that and software companies now utilizing some of those tools to gain productivity gains. And throughout this month, we've learned that we can build some of these models cheaper. I think in the longer run, that could yet be another tailwind, if you would, so that companies that may not have the budget for AI tools now can hopefully build some of those into their operations in a cheaper way.
So, Amy, you're focused on earnings here, but I want to talk about the macroeconomic picture as well and how the Fed factors in, because you see the S&P 500 responding right now to the idea that maybe this labor market is a little bit looser than we thought. Maybe that's good news for the Fed in terms of cutting rates. How do you layer on the economic influences with this focus on earnings?
Yeah, absolutely. I think your point on the Fed is another very, very important dynamic here. And quite frankly, we've been very focused on tariffs for the past couple of weeks, if you would. That's really, really creating a knock-on effect on what the Fed's next steps are. At this stage, it feels more like a pivot. It feels more like a toss-up, rather, with regards to what the Fed may do this year. And I think the fact that they are really pausing for the moment kind of fits the bill, because in essence, these tariffs, as we've been talking about, can create a huge headwind depending on what foreign currency does, what companies do in terms of can they absorb it, can they pass it on to consumers. All of that obviously is still up in the air at the moment.
And speaking of tariffs, the White House spokesperson now saying that they still plan to schedule that call between President Trump and Xi Jinping. And Peter Navarro, of course, his trade advisor, speaking at a political event, Katie, saying, quote, "Let's see what happens."
Let's all see what happens. Investors, policymakers, politicians. everyone watching for that.
All right, our thanks to Amy Kong over at Corient. Coming up here on the big program, a closer look at Ford and its EV business apparently sinking into deeper trouble as it loses ground to rivals. We're going to bring you those details coming up next. This is Open Interest, and this is Bloomberg. All right, here's what's high interest. A look at what's making headlines around the world and a Bloomberg scoop just crossing the wire. Panama weighing whether to cancel its contract with the Hong Kong-based company that operates ports near the Panama Canal. It's a potential concession to defuse President Donald Trump's threats about countering China's influence around the key waterway. Secretary of State Marco Rubio visited the canal and met with Panama's president over the weekend. Meanwhile, Indian Prime Minister Narendra Modi has been invited to the White House. According to an official, Modi will meet with President Trump next week. Modi's government has made a series of concessions in recent weeks, including an overhaul of its tariff regime and efforts to avoid any trade clashes. And El Salvador's president has made an extraordinary offer to President Trump as the U.S. ramps up deportations. The Central American country is willing to accept convicted criminals of any nationality, including U.S. citizens, for a fee. There are serious legal hurdles, of course, to sending American citizens abroad, but the offer to host deportees could be welcomed by the Trump administration.
All right, let's switch gears here and talk about Ford ahead of tomorrow's earnings report. And there's concerns that its EV business is losing ground against its rivals. There haven't been any new models for over 2 years, while other automakers are rolling out more innovative and lower cost options. You also have the threat of tariffs on Mexico making pricing difficult. Here now with more is Bloomberg auto reporter Keith Naughton. And Keith, who is eating Ford's lunch here? Don't say the Cybertruck, but is it?
Well, the Cybertruck is now outselling Ford's F-150 Lightning electric pickup truck. So, yeah, that is a change. The Cybertruck is doing well. But Ford is also now being outsold on EVs by General Motors, which has a lot of new models out there at lower prices, like the Equinox and the Blazer electric vehicles. And then also Hyundai Kia outsells Ford on electric vehicles, and Honda is coming on strong. So the problem is Ford's vehicles are aging, and these newer models are stealing the march.
What about the price differential, Keith? How much does that factor into this?
Well, you know, in the case of the Cybertruck, it actually costs more than the Lightning. So that is just sort of a phenom right now. But yes, Ford's vehicles are higher priced than particularly the GM, some of the GM offerings. And they're, you know, feverishly trying to cut costs on those vehicles. But you can only cut costs by so much. They have new ones coming in 2027 that will be priced below $30,000, but they've got to get there.
Yeah, it's interesting. I see so many Cybertrucks on the road when I drive back and forth between New York and New Jersey. Like you said, a phenom there. Talk to us about how this all wraps into what we're going to hear from Ford tomorrow. Of course, they step up to the earnings plate. What are we expecting to hear from Jim Farley?
Well, I mean, he has this, you know, two-pronged strategy to get the EV business back on track. Besides those lower cost EVs that are coming in 2027, he also has green-lighted extended range electric vehicles, which use a small, you know, gas engine to recharge the battery and can give you range of up to 700 miles. So those are seen as two good options. It's just that they're not coming until 2027. So we'll hear a bit about that. Hopefully we'll also hear about how they're cutting warranty expenses. Ford is the most recalled automaker, and that's been a big thing holding back their earnings.
Keith, we also want to hear, of course, what they have to say about the tariff situation. I know it's still fast moving, and obviously nothing right now is permanent. But when we talk about U.S. automakers, we know there is a big reliance on Mexico and to a certain extent Canada.
Yeah, that's the truth, Romaine. The thing, Ford has slightly lower exposure than GM and Stellantis does, but it still makes its electric Mustang Mach-E in Mexico, as well as its Maverick small pickup truck, which is very popular, and its Bronco Sport small SUVs. Those are all hot models, and they all come out of Mexico. So a 25% tariff on those would really affect Ford's competitiveness.
Yeah, I have to imagine that'll be a hot topic on tomorrow's earnings call. Keith, really appreciate this preview and, of course, a little bit more detail when it comes to these F-150 Lightning problems. That is Bloomberg's Keith Naughton joining us from Detroit. This is Bloomberg. All right, welcome back to Open Interest. We're taking a look at markets at session highs right now, about an hour into the trading day. You can see the S&P 500 up about 0.6%. Even better, if you take a look at the NASDAQ 100, higher by about 1.1% right now. The bond market isn't doing anything, so we won't even talk about that. Of course, we did get some economic data at the top of this hour. Job openings coming in soft, declining to $7.6 million openings in December, maybe adding some fuel to that narrative that the labor market is loosening. That would be good news for those holding out for a rate cut. Also, though, maybe we're taking some cues from some headlines that cross on the trade tension front. This coming from the White House spokeswoman Caroline Leavitt, saying that Trump's call with Xi Jinping is being scheduled to happen soon. Apparently, they were too busy to get on the phone yesterday. We saw the tariffs against China, the retaliation, but maybe we'll reach some sort of consensus here.
Yeah, you're seeing PVH, the Calvin Klein maker, down 1%. Illumina, the gene sequencing company, down 5%. This after China specifically targeted those two companies, as well as tungsten. Do you know we get most of our tungsten for China?
I did not know, but remember tungsten cubes? They were hot last year.
I do remember. Didn't Joe Weisenthal have one on his desk?
He might still. Stick with us. This is Bloomberg.
Robert F. Kennedy, President Donald Trump's pick to head the U.S. Department of Health and Human Services, appears on his way to that job. Live shots of a committee on Capitol Hill that just now, along party lines, cleared his nomination to go to the full Senate for a vote. That vote could happen as soon as today.
We'll continue to follow that story. You see some reaction in the market right now. Moderna shares hitting a session low, down about 5.5%. At the moment, we'll continue to watch that. But let's switch gears here and talk about consumer sentiment. It took a nosedive last month. You have inflation and job worries really taking their toll. Let's talk about how that could impact the travel industry with Larry Cuculic. He is president and CEO of Best Western Hotels and Resorts. Larry, it's great to have you with us. So you have fears about inflation. You have fears about the labor market. You also have fears potentially about tariffs. When it comes to Canada and Mexico, we know we have that 1 month delay here, but how could you see that impacting your business specifically if we did get those tariffs come through in a sustained fashion?
Good morning. When you look at tariffs, you have to consider inbound travelers into the United States. And statistically, Canada is our leading inbound tourist travel into the United States. Last year, there were 20.4 million visits of Canadian visitors into the United States. Consumer confidence and the relationships between our two countries are important.
So when we talk about how you navigate that as a CEO, I know you don't really have any control over what either country does in terms of restricting travel or restricting the flow of goods and services here. But how do you adjust to that? What is the conversation you're having right now with your team?
Of course, we want to closely manage how we can influence travel internationally as well as domestically. We have nearly 250 hoteliers in Canada. I actually have a call with several of them tomorrow to talk about how tariffs and importantly, how the exchange rate between the Canadian and US dollar impact their business and their bottom line success. So we watch our business on an international basis, noting we have 4,300 hotels globally in over 100 countries. And so to us, domestic as well as international travel is tremendously important.
That's really interesting. I mean, it's obviously a fluid situation when it comes to the tariff front, but let's talk about the exchange rate part a little bit more, because the strong dollar, I mean, has just been across every currency pair, it feels like. And what is the typical blueprint there? When you see the dollar appreciating the way that it has been over the past couple months, given that it's sort of a zero-sum game, I mean, do you see Americans traveling more internationally? Is it that clean of a read?
We do see U.S. travelers encouraged by the strength of the U.S. dollar to travel internationally. And I noted earlier, we're in 100 countries and territories globally, and we see that as a boost for our international development efforts. across the world. And, preparing for this, I thought you might ask about that. I actually prepared a list of, in this past year,
there you go.
Because of, I think, the strength of the U.S. dollar, where we've developed hotels, Vietnam, Colorado, Canada, Lima, Peru, Norway, Uganda, Mexico, Netherlands, Georgia, not the state, the country, the Kingdom of Saudi Arabia. The strength of the U.S. dollar, as well as I'll call it goodwill and reputation associated with the BWH Best Western Hotels, allows us to, I think, promote the strength of our brand globally.
What is sort of that core customer? And I'm speaking specifically outside of North America here, as you make that expansion there. What is the core customer? Are these sort of leisure travelers? Are they business travelers? What?
We see really strong leisure travel. And interestingly, international relations, international business relationships lead to I'll call it the comeback of business travel. But right now, we see a real strength in leisure travel and travelers wanting to have experiential travel, where, it kind of goes back to when we had, I'll call it the challenges of about 4 to 5 years ago, people realizing they want to live life to the fullest. And so leisure travel to, I'll call it, and by the way, kind of off the beaten path locations, Rome and Paris and London will always be strong. But it's those, I'll call it, kind of off the beaten path destinations that we're seeing really strong tourism growth.
And I want to talk a little bit more about the different segments that you cover, because I'm taking a look at your notes, and you have 18 brands from economy to luxury. And it feels like we're in the part of the economic cycle where we start talking about the trade down. So when you survey those different segments, are you seeing people trade down as maybe they start to look for deals and discounts here?
It goes both ways, quite honestly. People want to experience, I'll call it, life to the fullest. And so you see some people maybe traveling less, I'll call it less occurrences, but wanting to elevate their travel experience into the upscale and luxury segment because they want to enjoy that type of experience. And at the same time, you may see someone who has to travel or wants to travel to visit grandchildren and their parents. And so they may actually trade down, to your point, because they have to travel, and that length of stay is determined by what they feel they're obligated to do on a leisure, I'll call it leisure type of intent. So it can go both ways, quite honestly.
I am curious, as in your seat as CEO, particularly at a time where we are seeing, I guess, a lot of bifurcation amongst nation states and those governments here, how do you navigate that? I mean, do you speak at all with the leaders of these countries, or at least their proxies to some extent? Is that something that you have to navigate as a CEO right now?
Well, we're very fortunate. We have great international partners around the world who, I'll call it, most of the time leverage the industry associations themselves, because there's, of course, power in the industry coming together. A lot of times I'll call it one voice doesn't carry the day, but when you can come together, like we do in the United States with the American Hotel and Lodging Association, it carries a lot more weight and influence. And so we look to, I'll call it, our leaders around the globe in our industry and the associations and relationships they can build so that their voice is stronger.
All right, Larry, always great to get some time with you. Appreciate, of course, your point of view at this moment. That is BWH Hotels President and CEO, Larry Cuculic. Meanwhile, we do want to bring you more on that breaking news that Robert F. Kennedy Jr. has cleared the Senate committee. He heads to a full vote, of course, en route to lead HHS. You take a look at the market reaction now. Pretty interesting. Moderna shares falling to a session low here. You're also seeing Pfizer fall as well. Pfizer, this is an interesting one because they actually reported earnings earlier today. Their revenue for the fourth quarter beat the average analyst estimate. This stock, rather, had been higher, now moving lower, as are some of these other biotechs after that news. Romaine, we'll continue to follow that one.
Yeah, a lot of concerns about some of RFK Jr.'s past comments when it comes to vaccines. He seemed to try to assuage members of that committee in order to get that vote through. The full Senate still has to vote on that. Moderna down. Some other stocks also moving this hour. Bloomberg's Jess Menton joining us right now to talk a little bit about some of those stocks. Let's talk about the upside here, because the star of the day has to be Palantir.
It is, and especially because it was already on a tear even before we had its results yesterday after the bell. So it was up close to 400% through yesterday's close. And to put that into perspective, because there was a high bar there, if you look at where it was trading times forward earnings, it was around 170. But now you're seeing it up around 25%, on pace for its best day in about a year here. And a lot of that is just tied to its outlook, and especially when you're thinking about AI, and it's when you're thinking about what it provides those services and software to, it's the defense
agencies. And it wasn't even just best day of the year. I was looking, it was almost the best in the year to the day. It was like February 6th. It was an earnings report that also did it that day as well, where it rallied like 30% or something.
Yeah, and of course, it was one of the best performers in the S&P 500 last year, with the caveat it was added to the index in September.
There you go. You can't cheat.
It's also the outperformer since the election, I believe. So there you have it for Palantir. That's a happy story. Let's talk about Pepsi and get some bad news.
So when we're looking at the consumer staples and consumer packaged good companies, Pepsi is one of those. So it's down around 3.5%. Unfortunately, even though you saw it beat on some of the top lines, an issue that's come not only for Pepsi, but when you're thinking of Coca-Cola and other consumer packaged good companies, is when you're thinking about volume. And specifically for Pepsi, it was in North America. And a lot of talk back in October about shrinkflation, what it means for when we're going to a grocery store and buying things like chips, and what it was doing to mitigate some of those things. So you did see some issues there when you're thinking about Quaker Oats, as well as when it came to its chips, but also when it comes to beyond that, because we'll have Coca-Cola next Tuesday, so that's going to be important to watch.
Absolutely. One other stock I want to point out is Super Micro. This was like the darling. The stock's down like 70-something% from its all-time high that it hit about a year ago.
Right.
Getting a decent bid today, up about 6% here on the back of earnings.
So it's high back in that March. It was around 118. If you're looking where it's trading right now, it's actually around $28.
Yeah.
So what's happening here? So February 11th is supposed to have an announcement, because again, there were those threats and questions about whether or not it would be delisted, and NASDAQ gave it a deadline to February 25th to announce what its prior fiscal year results were going to be. So it's coming ahead of that a couple weeks. So investors are hoping that that's what they're going to do. Of course, there were those accounting issues that we were talking about in recent months too.
Yeah, it did appoint a new independent auditor. Issues, yes, that's very, very diplomatic, Jess Menton. We appreciate your roundup as always. That is Bloomberg's equities reporters, Jess Menton. Now, coming up, Google is the next magnificent 7 stock to report earnings, with investors hoping for continued momentum in the cloud and search businesses. That conversation up next. This is Bloomberg.
Alphabet shares higher here in the cash session, up about 2.5% ahead of its earnings results, scheduled to be reported after the bell during the close today. Investors keeping a close watch on cloud and search growth. Mandeep Singh over at Bloomberg Intelligence, our senior technology analyst, here to break it all down. The overall numbers, I mean, they're going to generate like $100 billion in revenue or something like that.
A gazillion,
as they do. A gazillion here. What is the main story, though? I mean, when the results come out, what's the main thing you're going to look for?
I mean, the beauty of these Mag 7 companies is they've got, really healthy businesses embedded in them. So in the case of Alphabet, YouTube plus cloud, it's a $100 billion revenue run rate business growing at around 25 to 30%. Wow. So when you look at the overall growth rate, it's, low teens, not that impressive. But when you look at, Waymo, a lot of optionality. So that's where I think, Alphabet clearly has, some competition in search, and it remains to be seen how much impact it has on the query volume. Yeah. I think ad side, they'll still be quite resilient when it comes to the search ad revenue, but it's the query volume that I think could be one negative point. But
when you say query volume, that's like when I go onto Google and type
Google
in,
search.
Give me something, and then they give me back a bunch of results that don't
the blue link search, the traditional search. And look, they've rolled out Gemini, they have integrated Gemini. Google, as a company, has got 7 products with over 2 billion monthly active users.
Wow.
Just think about, the scale of how successful their apps are. And, we talk about Instagram and Core Blue app and WhatsApp. They've got 6 apps with over 2 billion users. So clearly, they have executed very well over the years, but right now they're at a point where they have competition on the search side. It's going to have an impact on the search volume. But I think what Google's advantage is their own kind of data center infrastructure. Everyone is buying NVIDIA chips. Google rely on TPUs, their own chips. They are vertically integrated when it comes to their data center operations. And that over time, if everyone is talking about, CapEx efficiency, Google is already efficient. And that's what will show up.
Well, that's where I wanted to go. To that point, before we all got deep-seeked last week, the news that we were talking about was Meta boosting its planned CapEx. And Microsoft also has impressive numbers. Could we see some, lift when it comes to the planned CapEx by Alphabet? What are you looking for there?
Yeah, so look at Microsoft. They gave us the $80 billion AI CapEx number. Meta raised it to 60 to 65 billion. For Alphabet, the consensus is around 57 billion for this year. Now, our view is they will raise the CapEx because a lot of the CapEx they're going to spend is going to translate into cloud revenue. Their cloud revenue growth was mid 30%, whereas, Amazon was like high teens and Microsoft was 30, 31%. So clearly that cloud revenue is accelerating. And part of the reason is they've got more compute available to deploy in their cloud, as opposed to everyone using it for internal consumption.
I have to ask you the question that I'm asking everyone, and that is about the potential risk of geopolitics on whether it's tariffs or sanctions or export controls and things like that. Anything investors should be worried about?
Yeah, they lost a monopoly lawsuit here in the U.S., and they are supposed to divest Chrome. So that is a major upcoming, catalyst in terms of what happens there. And now with China probing, I don't think much will come out of that simply because they don't generate any revenue there. But clearly they have a lot of regulatory overhang. So.
All right, Mandeep, got to leave it there. I assume you and Romain will see each other later on the close when these numbers come out?
I hope so. Mandeep's always welcome. You like this, wire to wire. We do the open, we do the close. Do you want to stick around until 5, Tiana?
No, I don't. But I will
You're welcome to.
I will be watching fondly. That is Mandeep Singh of Bloomberg Intelligence. Now, coming up, we have a legal showdown over Doge. More details about the challenges to Elon Musk's government efficiency team next. This is Bloomberg. Well, Robert F. Kennedy Jr., he is President Donald Trump, picked to head the U.S. Department of Health and Human Services, was just endorsed by the Senate Finance Committee after 2 tough hearings. His nomination will now advance to a full Senate vote. And in reaction, you can see Moderna, along with other vaccine developers, really getting hit on this news. Let's break it down now with Balance of Power co-host Kayleigh Lyons joining us from Washington. And Kayleigh, this is a bit of surprise when we think about the tone of those hearings.
Yeah, it was absolutely contentious. RFK Jr. was questioned heavily, not just on his view on vaccines and whether they're linked to autism, whether they're effective, but also on things like reproductive rights, which he faced some critical questions from conservatives on. All that said, though, he got through the Senate Finance Committee. This was a party line vote. The 14 Republicans on the panel voting to advance his nomination. The 13 Democrats did not. And the one holdout we were all wondering about was Republican Senator Bill Cassidy of Louisiana, who is a medical doctor, actually chairs the HELP Committee where RFK's second hearing was held in the Senate. And he ultimately voted yes for him. So this will now go to a full floor vote at some point. It's not a guarantee that just because he cleared Senate Finance, he will clear the full vote on the Senate floor, but this is a big step forward. I would note as well, we're awaiting one other confirmation vote in committee today for Tulsi Gabbard, who has been tapped to be Director of National Intelligence. That will be in the Intel Committee. She could have only afforded to lose one vote, or if she lost one vote, it would have tanked her nomination. But we've gotten a series of Republican senators coming out saying they will support her, including Susan Collins, Jim Langford, who had some tough questions for Tulsi Gabbard in her hearing. And then we just learned this morning that Senator Todd Young will be supporting her as well. So she does look, barring a surprise, to be on track to clear Intel.
Oh, wonderful. So this seems like a unified front here by the Republican Party, at least at the committee level. I know these nominations would still have to go to a full floor vote, but is there any sense here, Kayleigh, that there is any material break here in that Republican unity in voting for the candidates that Trump has put forward?
Right now, Romaine, it does not appear so. Everyone does seem to be falling in line behind the president's nominees. That said, we saw in the case of Pete Hegseth that we actually had to have Vice President J.D. Vance called in to break the tie after Susan Collins, Lisa Murkowski, and Mitch McConnell, the former minority and majority leader for the Republicans, all voted against him. So it's not to say that there might not be some dissent, but because it would take more than 3 senators to shoot down any of these nominees, it does look like, by and large, they're all going to be able to advance. If anything, it may be that J.D. Vance has to come in and break the tie again. But right now, it seems like there is a great reluctance within the Republican Party in the Senate to go against the president's wishes.
Which is really interesting, Kaylee, because you think about when these nominations were first coming through a couple months ago, the reaction was, OK, there's no way all of these nominations come through, and that has to be a calculation by the incoming Trump administration. But I mean, you think about the more controversial picks, RFK Jr., Tulsi Gabbard, Pete Hegseth, doesn't seem to have been a problem, maybe in the way that it had been predicted.
Yeah, and maybe in part, Katie, I hear from Strategist a lot that it had to do with the fact that there was the early downfall of Matt Gaetz, who was Donald Trump's original selection to be Attorney General. And in the face of pushback from within the Republican Party, Matt Gaetz had to take himself out of contention for that role, which is why Pam Bondi could be confirmed as Attorney General instead as early as today. And given that Donald Trump didn't already get his way on one of his initial nominees, the thinking was it was going to be very difficult to tank any of the other ones and still remain in good standing with the president, who we know values loyalty incredibly highly, almost above all else. So, yes, these more controversial nominees, while they did have some difficulty throughout the process, including in their hearings, which by no means were easy on them. Senators had very difficult questions for them. It does seem, by and large, everyone's coming around and saying, we're going to give the president what he wants.
All right, so the president gets what he wants here, at least when it comes to his cabinet picks and advisors. I am curious, Kaylee, about the Trump's agenda for the rest of the day. I know he has a meeting with the Israeli Prime Minister Benjamin Netanyahu. I'm sure he's going to sign some executive orders that will hold up to the camera for us all to see. And we're hearing rumors that he's trying to schedule a phone call, or his people are trying to schedule a phone call with his Chinese counterpart, Xi Jinping.
Yeah, after tariffs went into effect at midnight last night, Romaine, and China quickly countered with tariffs on 80 U.S. products. The press secretary, Caroline Leavitt, at the White House did say that they are working on scheduling that phone call between Xi and President Trump. President Trump himself, when answering questions in the Oval Office, when signing executive orders yesterday, said he would maybe be talking to China within the next 24 hours. So we'll see if indeed that phone call happens and if it can result in some kind of pullback on tariffs, as was the case after his conversations with the leaders of Mexico and Canada, respectively. But this meeting with Benjamin Netanyahu certainly is going to be important, as well as the first time in this second administration that President Trump will be hosting a foreign leader at the White House. The phase 2 of the ceasefire between Israel and Hamas is likely to feature very heavily on that agenda, and we do expect they will be delivering a press conference in the 5 o'clock hour. So we'll bring that for you on Balance of Power.
All right, a busy Balance of Power coming up both hours there. That is Bloomberg's Kaylee Lines in Washington. We'll let you go prep now. And let's take a check on these markets, because you take a look at the S&P 500. We're near session highs, up about 0.6%. Your biggest gainer right now in the S&P 500 is Palantir, as you would expect. And you're seeing that expressed in the NASDAQ 100 right now. Big tech index up about 1.1%. We'll see how the picture changes after the bell in the after hours when we get those Alphabet earnings.
Yeah, and a lot of big earnings after the bell, we should point out. It's not just Alphabet, but you get Mattel, Match, AMD, Cirrus Logic, EA, a lot of companies that are very consequential to the economy, a lot of companies, Katie, that could be affected by Washington policy.
Well, tune in to the close today. You can see Romaine break it all down, of course, a big earnings day, but we'll see you again tomorrow. This was Bloomberg Open Interest, and this is Bloomberg.